Welcome back to another weekly review. We're going to be looking at the trading week of July 6th, 2026. Burn through data pretty quick here. Monday we have services PMI 9:45, 10 a.m. we have ISM services. Tuesday we have nothing major. Wednesday we have the 10-year bond auction at 1 p.m. and the FOMC meeting minutes at 2 p.m. Thursday we have jobless claims as we usually do at 8:30, and then 1 p.m. we have the 30-year bond auction, and then Friday we have nothing major noted. We do have scheduled the Fed monetary policy report. Not sure when that gets released. Also, probably shouldn't be really too market impactful this week, I would say. So I'm going to dive right into this. I think the big thing this week really to pay attention to would be if we start to see some rotation back into some of the semiconductor names and some of the tech sector, because that's really what's been dragging us down the last few days. I guess all last week, but like the last few days specifically. So if we're looking at the S&P 500 futures here, so this is yes. It's kind of a mess. I mean, I think we can probably boil this down fairly simplistically, but as far as, how these days have played out intraday, it's been, make a new high, liquidation, and slowly creeping higher, putting the daily into one time framing up and then putting it back into balance. It's been a bit of a mess. So the big thing really that we have to note here is that the weekly time frame is in balance. The daily time frame is also in balance, but the weekly time frame is in balance. The monthly is still one time framing higher. The highs of weekly balance currently are about 76.48 down into 72.48. So we're in a fairly wide weekly balance range. The previous week, so not last week, but the week prior, again, we had kind of the same thing we had last week, but very messy intraday action, which basically set a multi-day balance range. Mondays open, we had a pretty wild back and forth on Monday's open, but the result of that day and the result of the rest of the week was we're actually able to break from this prior daily balance range, hold above, and then frame value on the weekly higher and frame another daily balance range above that prior daily balance range. So basically consolidation, break, consolidation. What buyers need to focus on this week is maintaining this consolidation. So maintaining this compression of price above this prior value range down here. So the big pivots for me really are going to be 74.90s to 74.80s. So this is last week's value area low, the prior week's value area high, as well as the old daily balance high and current daily balance low. So all things considered, like the big range that matters this week, if you want to stay on the long side and you want to look for those long trades, we have to see 47.90 to 47.80 hold. You can assume if we're not holding this, if 74.80s offer, then I think you can assume that we're going to be testing down into the bottom of this old consolidation range down here, this old balance range down here. So really, for me, like weakness would be a loss of 74.80s early in the week, and that would target the rotations back down into that weekly open, down into the 50-day moving average 74.20s, down into the big pivot we have down at 74.10s. But I think even more likely, if we're losing this, we'll probably liquidate this inventory that we built up here and test the bottom of this old daily balance range down into 73.50s. Below 73.50s, it's anybody's guess really. I mean, like if we start to lose 2 weeks of inventory up here, buyers really aren't going to be able to hold this, I don't think, and we'd probably see a liquidation down potentially into the weekly balance lows down into 72.50s area. So big thing early on, big thing all week is can we hold 90 to 80? If we can't, rotations lower down into likely 2010s and then down into 73.60s. If we're dipping into here, so if we see this is the Friday holiday session, this inventory is very light. Obviously it's net long on this day, but it's very light. So the big thing with a day like this is that it is fairly easy to liquidate this, especially going into the cash hours. So I'd be conscious of the fact that we did drift higher on the holiday session. We could easily liquidate this lower. We could go back into Thursday's settlement. We could easily be testing down into the the 75.15s area, where we've seen pretty active buying. So what I'll be looking for early on is, first of all, like, do we have any short-term liquidation of Friday's range back down into 75.10, 75.15, 75.10 range? And then do we see any acceleration down into this big zone that we have in the 74.90s to 74.80s? If we're holding, so if we're putting in decent lows and we're holding dips into this range, then again, I'll look for those long trades, for those rotations back up last week's profile, back up last week's range. But the losses, I'll be looking for the short trades down into the lows, like we just talked about. If we're talking about like early strength, I think what we'd want to see obviously is we'd want to see a persistent bid in the NASDAQ. We'd really want to see, flows back into some of those names that have been selling off. The mag names actually have been holding up quite well. They put in a lot of volume in the lows about a week and a half ago. Those look, to me at least, those look like those at bottom, but at least right now, obviously with how big and concentrated the market is in the semi sector, it's really going to be about, semi and memory catching a bid and kind of catching back up to everything else that's happening in the market. So early strength in the S&P really would be a hold of 75.40, 75.20 in my opinion. So basically this is a pivot on higher time frames for me, but what we're looking at least from a granular level, this 40 to 20 range is going to be pretty important early on. And if we hold into this range, and I mean even allow into probably 75.15s. If we're holding into this range and we're finding good lows and acceleration higher, we have a poor low to target from Thursday's range, which is 75.93s, and then anything really above 75.80s, if we're holding above 75.80s, it's just targeting back to all-time highs for me. So it's basically like, it's pretty simple in the sense that we want to see really a break of how this daily balance range, we want to see how this daily balance range breaks. We want to see if we have acceptance above the 75.80s area, above this top of value, above current daily balance highs, 75.90s, to move us back into weekly balance highs. We want to see if we have a lack of acceptance here. So if we have a lack of acceptance holding 74.90s to 74.80s, and if that creates a puke and a liquidation of this inventory that we've been building for the last couple of weeks, multi weeks, but the last few weeks up here. So I think too, I haven't traded the NASDAQ a ton lately. I've actually been trading ES and I've been trading small caps quite a bit because honestly small caps have been really fucking simple to trade the last few weeks. So it's just been cleaner to me. The S&P has been a little bit more back, and S&P and the smalls have been cleaner to me. Oil is starting to look a little bit cleaner to me as well now too, but the NASDAQ has just been difficult for me in the sense of it has been you're extremely right or extremely wrong very quickly, which is good for risk management. It's good in the sense of pretty quickly if you're going to be right or wrong on a trade. But the problem with how fast it's snapped back and forth is that can mean, I take, 2-3 paper cuts before a trade works sometimes. And it just hasn't been worth putting risk on for me in this current state. I'm looking at too many markets to solely focus on the NASDAQ. The NASDAQ I really only trade when I have either a signal from my system or, something that's really clean while I'm watching it. And by the time I've caught some of these, caught in the sense of seen what's happened at where I'd want to be trading it, it's 150, 200 points away because we're getting 100-point candle 1 minute bars, right? So it just has not been the vehicle for me to be trading the last couple of weeks. It's just been too whippy and too fast, and I just haven't had the focus to be able to trade it. So, but I think this week, as far as again, the idea of strength and weakness, we frame value high. We're in balance as well in the NASDAQ. We were able to frame weekly value, overlap, and frame higher again last week. The big thing really after this huge liquidation day that we had that dragged the entire market down on Thursday is, again, we have this holiday session drift back up. This can easily liquidate back down. But I think the big thing really about this week is do we hold last week's value on the NASDAQ, which also coincides with the previous week's POC. So basically, again, from a really simplistic view here, if I'm a buyer, I don't really want to see the NASDAQ below 29,650s. I don't really want to see us losing the primary distribution from the week prior. I don't really want to see us losing last week's value area low. I think what you could see potentially is a move down to the naked POC from Thursday into 450s. But again, I want to see, if we're testing down into 450s, I want to see us move really fucking quickly away from that. I do not want to spend time below 29,650s if I'm a buyer on the market, full stop. Because if we start seeing us lose the primary distribution of the week prior, we start not being able to accept last week's value, then we're going to be seeking lower into the current weekly balance lows at 29,100s. And again, we have multiple weeks of inventory sitting above us where we could get a very sharp, nasty liquidation down if we're not accepting, 2-3 weeks of inventory that's been built above us. So strength again for me on the NASDAQ, well, obviously would be single names. Seeing those single names start to really catch a bid, start to really look like they're bottoming out. And that would probably be represented by any acceptance above 29,950s. So we'd want to see basically, we'll call it IB for the sake of simplicity. So Thursday's IB low, we'd really want to see this reclaimed. We'd want to see last week's POC at 30,000, call it 30,000. Reclaimed. We'd want to see a lot of acceleration above this, take us back up into the 320s as a target, back up into 3 or 440s, and ultimately last week's high to continue that move back up into balance highs. So we don't have a lot of data this week. We do have the Fed minutes on Wednesday, which could give us a little bit of volatility, just considering the fact that this will be the first minutes release since Warsh took over. So we'll see if there's anything groundbreaking in those. I'm sure there won't be, but it's just gonna create a period of volatility that day. So we'll have to see if there's any interest, up or down. As far as a bias goes, I didn't make a video last week. I didn't have time. But as far as where I'm positioned, I'm still positioned long on the NASDAQ from a little bit lower. We've almost round tripped the last third of my position, which hopefully we don't, but maybe we do. So I'm still long TQQ with about a third of position from a little bit lower. And I'm long, several single names. I added Microsoft, I added a few others as well last week. So, or the week prior. In the last couple of weeks, I've added a bunch of single names. So as far as my directional bias, we're in weekly balance and we're in daily balance. We're locked inside a pretty defined trading range right now. So as far as a bigger picture, I don't really lose confidence on this market until we see no ability to bid balance, basically. So if we start to lose the weekly balance range on the S&P 500, things are probably changing. And we should probably be a little bit more, cautious about, looking for those big swing longs. We might want to, take some risk off as far as, if we're looking at from a swing trading perspective. But as far as, bigger picture for me, the monthly is still framing higher. The last week actually closed green, which is hilarious when you look at this. But we actually closed green last week. I don't have any huge red flags as far as my positions go. Where I'm sitting, where I'm I got to cut all this. So position for me, bigger picture, is generally going to be, looking for good lows to buy while the monthly is still in an uptrend. And we're still in an uptrend on the monthly, obviously. The weekly is a bit of a mess and the daily is a bit of a mess. But as far as, the bigger picture goes, until we start losing these larger balance ranges, talking about, huge correction on this market is kind of silly. So I know there's a lot of noise online. There's a lot of people that will be constantly or have been shorting this all the way up and will continue to short this if we go higher. But as far as what my system has told me and how I'm positioned, I'm looking for this market to continue higher. And if we don't do that, it's going to be pretty obvious pretty quickly. That's the beauty of being a trader, is that, if we're invalidated from, a bigger picture perspective, then it's fairly easy to just get out of position. I'm not an investor in this market as far as, that's concerned. I am from a long-term basis, but, I think just be nimble this week and just really be focusing on, can we basically hold multiple weeks of value trying to grind higher in the short term? Can we see, do we see continuation on breakouts? That's a big thing I'd say as well, is that last week was a bitch as far as breakouts go. Last 2 weeks, I should say. We had some really good, top blasting breakout higher trades over the last like month or so, that tape has obviously changed. So we have not seen real continuation higher above IB, on a daily basis consistently for a couple of weeks. And even if you just look at this 30-minute chart that I have here, you can clearly see it. Like IB high, IB high, IB high, IB high. We got it here. We got a little bit of a continuation here. Here's the high, fail, fail, fail. Here's the high. High of day was IB high, IB high, IB high, IB high. So like we haven't seen those days where like we're setting IB and we're really ripping away from it. We've either had, we've set IB, then we consolidate and chop the rest of the day, which we've kind of done for the last like almost month at this point. Or maybe we have a sharp liquidation the day, after IB set, which is immediately bought back up in Globex. It's just been messy. It hasn't been a super clean trending market in quite a while. So you just have to be cautious. And when I say you, I'm talking to myself here. So we just have to be cautious of the fact that, we haven't had those clean continuations away from IB. We haven't had those really clean trend days. Even when we've had trend days, we've had several days where, you have, statistically things stack for what should be, 8 times out of 10, which should be a cleaner trend day. And it looks like it is until, halfway through, after 2-3 p.m. And then we liquidate the range back into balance. So those days that were probable for, higher probability trend day, continuation days, close at the highs, have not been doing that. So for me, like when I see that, like it raises my guard a little bit as far as, what I'm looking for from a, bigger picture perspective. But at the same time, like it hasn't also invalidated the bigger picture thesis for me. We've liquidated, we've shot lows, shot down back into the lows, but then it's been bid right back up. So from a swing trading perspective, being positioned long lower, it's been fine. From an intraday perspective, it's given some really nice rotations both directions. But from like, a net new adding positions, you got to be really specific in what you're looking for, and you have to be really good at picking sectors and picking single names that look like they have sustainable bottoms, sustainable breaks, which so far, I mean, it's been okay for me. So on that front, I have a couple dogs in my portfolio, but they're multi-year swings that I'm not too worried about. But like, it's been tough. It's been a choppy market. It's been tough. I'll be the first to say that. I know everybody paints it as being, super easy online. Their levels always hold. You never see any of the trades that ever get taken. I try and be transparent, especially on those hard days where like, this is what I actually did. I'll show you the entire day. I'm not going to screenshot and crop one single trade of that day to show you all the stop outs that I took. Like there's a lot of facetious people and there's a lot of really disingenuous things you're going to see online when the market gets difficult. And I think if you're struggling in this market, just take a step back and like just follow a defined system. Make sure that you're not chasing breaks on chasing bad breaks, which was easy to do last week for sure, chasing bad breaks, and you're not trying to initiate in places that are just in the middle of nowhere. I think I had a couple of those trades last week where I just had difficulty with the intraday action, and where I wanted to see tested would get tested, but in like the worst way possible. So like we'd look like we put in a good low, that would get fucking blasted. We'd test exactly where I want to be a buyer. I'd re-enter, that trade would work, but I took a stop along the way, which I shouldn't have taken in the first place. So even me, like I've been, I'm not the best trader at all by any means, but I've just been trying to, pare things back and just kind of, simplify this for myself. So if any of this helps, like the video, subscribe to the channel if you haven't. Appreciate your time very much. Thanks.